The cool thing has obviously been that the market advances that we've seen over the course of the last couple of months have been quite narrow. As you say, concentrated in a relatively small number of names, particularly focused on the tech side of things. A lot of those are obviously trading at eye-watering multiples, but that obviously reflects perception that earnings growth prospects for those companies is pretty good. Nonetheless, in terms of where we are for the broader market, we've obviously pretty much erased all of the declines that we've seen in the market since the end of March, bar a couple of percentage points here and there. That's been pretty positive, very much reflective of the massive amounts of liquidity that have been injected into the financial system by the Federal Reserve and the US government. All very positive, but it looks as though a lot of that is beginning to peter out. And at the same time, we don't appear to have the coronavirus outbreak under any sort of control, despite protestations to the contrary from the administration.
Yes, no, I hear those concerns, Stephen, and I just wonder from a global equity standpoint then, what are you expecting? A little bit of a dip here, a full-out correction, a retest of March lows? What do you think happens?
Well, I think that it's difficult to say. I mean, obviously, we are not looking as likely as having a V-shaped recovery as had been earlier expected, perhaps. It looks as though it's going to be a much longer, slower, drawn-out recovery than was originally thought, and perhaps now we're going to have to wait until more positive news on a vaccine and the rollout of that vaccine takes place, which could take many months from here. Obviously, valuations are, as far as global markets, pricing in a lot of much more optimistic news. We saw last week in the earnings calls from the banks that they're making a lot of provisions for a continued slowdown in economic activity during the course of the current third quarter and possibly even into the fourth quarter of this year.